The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. And joining us now here from the agmarket.net Farming for Profit Not Price Conference in Nashville, Tennessee. Let's talk about the cattle inventory report. Look at some of the dairy numbers in this report as well. Always good to talk with Robin Schmall from Ag Dairy Association with agmarket.net. Robin, it's good to see you again here in Nashville, and good to talk with you again. Hope all's well.
Yeah, great to see you. It's always a great time down here, and it's a little warmer than back up in Wisconsin.
But that's
good.
Very true. Yeah. Well, and I mean, a little bit of a heat wave we kind of saw in January
Right.
for many folks. That weather pattern might be changing, though, by the sound of it. That's going to be something we're going to have to watch here through the month of February, no doubt. Let's dive in here. Cattle inventory report was out this past Friday. A lot of beef numbers there, dairy numbers in that report as well. Let's start on just the overarching numbers. It seemed that, as expected, pretty friendly reports, leaning bullish for cattle. What are your thoughts?
Yeah, I was bullish for cattle, both the dairy side and the beef side. We had 86.7 million head of for all cattle and calves on the inventory. The cows and heifers calved were 37.2 million. That's the beef cow number was down 1% from last year.
Okay.
So the other standpoint was beef replacements at 500 pounds and over at 18.2 million head. That was 1% below a year ago. So that's solidifying that standpoint of continued tightness in the market. We're going to be looking at, if we're not really increasing the replacements, that's going to be a 2 to 3 year process in essence.
Mm-hmm.
Well, I'll just give it 2 years just because it has an average. So potentially we're going to not really see a huge rebuild of that herd, and we're going to should see some bullish or lofty prices. Maybe not where we are, but still lofty historically for, I'll just say, another 2 years probably.
I had heard something interesting this morning, just putting this into perspective a bit, with the herd number size, the lowest since we've seen back in, the 50s. But thinking about, the amount of beef we produced back then compared to now, just, the uptick in production and the heavier weights, et cetera, et cetera. I think some of that's maybe at play here in this market as well that we have to maybe, I guess, put into perspective a little bit, Robin.
Yeah, we got heavier weights. So Packers are pulling back a little on some slaughter, but it doesn't make any difference, because we have the amount there. But yet they're still not backing up the cattle in the market. The heavier weights seem to me to be a choice by the feedlots. Mm-hmm. And they don't have any qualms right now about, hey, if the Packers don't give us what we want, we'll just hold them over another week or 2 weeks. So they're really the ones in the driver's seat. So the dynamic is a little bit different than what we're kind of used to for, quite a while in the past.
Yeah, and it's especially now too when you see futures prices, breaking that $200 mark in fats, and I mean the cash market's been there for a while now. It seems like everyone's quote unquote got their bullhorns on still in this cattle market, Robin.
Yeah, I've thought that maybe the market would find a level of resistance, consumer resistance, and we haven't yet, and it's just a real surprising factor. So where can we go? I mean, the funds are record longs and in the live cattle as of the last report. Where can we go? An overbought market really doesn't mean a whole lot right now with the fundamentals that we're seeing and the continued consumer demand that seems to be happening. So it's exciting.
It is very true. I want to talk about the dairy side of the report that we got on Friday. What were some of the numbers there, Robin?
Well, we've had the milk cow numbers were a little bit higher at 99.35 million head than it was a year ago. The real thing was the heifer milk cow replacements. And we were at 3.91 million head. That's down 1% from a year ago. I keep track of the ratio, replacement heifers to milk cow ratio. That ratio came in at 39.1%, which is the tightest ratio we've ever had.
Wow. Could some of that be attributed to beef on dairy? There's been a lot of talk about that, of course, in recent years.
Yeah, I believe it is, because we're seeing, the standard kind of seems to be about 50% are being bred to beef on dairy, 50% to sex semen or heifers. It's lucrative. You're running $800 to $1,000 a head for these calves, and that's cut into our replacement herd, and that's why we're seeing these tighter numbers. So the replacement costs now they're pushing up $4,000 a piece for these replacement heifers, and that's record prices, nosebleed prices, and that beef on dairies really contribute significantly to that.
Well, I know when we look at the dairy markets in general, kind of final thoughts here, we've seen plenty of volatility recently. What's your outlook here as we get into the early part of 2025 when it comes to the dairy markets?
Well, it looked like we were starting to see some good support building under that market. Our inventories on the different types of cheese was running lower than the previous year. Our production was running a little bit lower, but there was going to be a limitation because our demand was down about 0.5% from a year ago. So we're a little struggling a little bit on demand, but it seemed like we were seeing some better support, or at least some support coming into that market. Well, the tariff situation by President Trump has put a lot of uncertainty in that market. That last week, Thursday and Friday, we dropped a huge amount because of that coming on, because Mexico is the largest buyer of overall dairy products. Canada is the largest buyer of butterfat from us. So those are the two that came into play. Now, with some of the uncertainty and some changes as far as what Canada was going to list now for retaliation or retaliatory tariffs, and Mexico may be doing a little bit more. Just this morning, we saw double-digit losses, upwards to 40 cents a hundredweight in some of the earlier contracts, piggybacking off of Thursday and Friday when we lost like $1 a hundredweight. And then just a little while ago, after that came out, we were at 20 cents higher. So the volatility is and I said that at the beginning of the year, the volatility is going to be incredible this year in the dairy industry. We saw that in the cheese prices the last couple of weeks. Now we're seeing it in the futures prices, and this throwing this tariff situation on top of it is just going to increase that substantially. So the outlook now is really fluid, if you want to say that. I think our missing link is going to be the demand, overall demand. We need to see that overall demand increase a little bit. Then I think we could maybe see stuff averaging maybe into the $20 a hundredweight or something. But we're kind of riding on the edge right now.
A lot of things to keep a look at and plenty of volatility out there. Anything final you would share with folks, Rob, before we wrap it up today?
I think that when we take this as a whole and looking at the grain markets along with the dairy markets, and we, the grain markets are a big influencer on what we could do as far as milk production. There's always been a strong correlation between corn and milk. The farmers need to be able to look at these things and say, where am I here and what do I need to try to protect and accomplish? Let's not just get caught up in the volatility and throw up our hands and say, okay, I'm not going to bother because it's too confusing. No, these are giving the opportunities. So these market swings and stuff are what we need to take advantage of, to take opportunities for protecting that price so that you can continue to stay in business.
A lot of things to look at. Got to pay attention to that risk management. Robin Schmall with Ag Dairy in association with agmarket.net. Good to see you here at the Farming for Profit Not Price Conference in Nashville, and we'll talk to you again soon.
All right. Thank you. Great to see you again.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.